Good morning and welcome back to the ThetaWave Trader and the Breakfast Club. We are back at home base again this morning. I hope you're all doing well. It was a long drive yesterday. A long drive, lots of stops along the way. Looks like we had a very interesting little turn while I was on the road there, hey? Good thing my battery went dead on the old computer. Those of you who I was chatting with, we got that nice little run down into that 400 level on the hourly. We're looking for this level down here, and we got it right to 334, something like that. 340. Yeah, 340. So that was our objective yesterday. Done and dusted. And then we got this nice little change in direction, and then market structure shift. You don't even get a chance to get on top of that. You have to look at this old high back here. So each one of these highs that get broken, you can just come back and tap that, continue running higher. Look for this 3 a.m. candle to get breached on the upside, close on a 15-minute, continue going higher. And here's where we sit now. A new high has just been made at 8:30, just before 8:30. Now we're looking for a reversal. There's nothing on the hourly just yet. The 15-minute. We have nothing on the 15-minute yet either. But the 5-minute has given us a little change in direction here. We have no market structure shift. We do have another little confirmation that we want to run lower off of here. So this has to hold here right now. I guess they're overlapping kind of. So they're so close together. You have to allow for this BISI to get retested. So we just tested it once right there. So we can come back into the consequent encroachment of it. I wouldn't want to see it get any higher than the consequent encroachment. We want to see a little portion of that to stay open and keep running back down. I want to see this discount box in this larger range here get retested or touched, broken through, retested, and then see if we can go lower. Not that we're picking the highs, because you can't pick the highs. It was got to be ready for change in direction. So the 1 minute showing you change in direction. Got this little order block here, a breaker that takes out this little high and this high. That's traded through. We didn't get a trade back to it. So you look for the next level here. It gets traded through right there. You get retested right there. Looking for the discount box. Discount box gets traded through. And then the last discount box gets traded too. We haven't traded through it yet. So got a reversal, change in direction. So you want to see this go higher. It's got to break this little candle here at 738 to start going higher and reach for this premium box up here. At least this one first, then that one, because that's at least 50%. I hope you're all doing well this morning. Let's see if we're I am live. Yes, we are. Got ready. I love that Mr. Beast is helping, and he's got his own fat camera crew following him around the world. He's helping people out doing some water. That's awesome. Who else we got in here? Say hi, man. I haven't seen your I haven't seen any responses over there. I know there's 6 of us watching, so say hello, pop in. How's things going, you guys? Guys and gals. Good morning, Hadi. Rez, good morning, good morning. Let's see if we can't get some action today there, Hadi. We had a nice little run down there yesterday. Jean-Paul, good morning. I'm going to quickly zip through the rest of these. I'm looking for 670. If I can close below 726, and they take out these equal lows, looking for 670. Let's see where Dow Jones is doing today. Guys are trying to show me their new stuff. Dow Jones on a slight turn here. If you're running for these equal lows, I want to see this little candle right here get taken on the downside. And 46,042. ES hasn't given us a change yet on hourly. So they're still bullish until proven otherwise. Where are we sitting this morning? Morning, Ollie. Yes, indeed, Hadi. Russell, good morning. Kamal, good morning. Like to see the 641 on NQ. I do like to see this come lower now in oil. If this doesn't book it back through 641 or 64.43 on a close, then I'm looking for this to come lower. And if we lose 64.19 on a close, look for a nice run back into this breaker here. Or propulsion candle, whatever you want to call that. I want to see if this provides some support. And if we start eating through that, then we're looking to come back and retest in this 63.50, 63.60 level. It's going to show this to me every freaking time here. I don't care about all your new bits. I don't want to see us get below 13 or 1294. No, 1290 on natural gas. And we'll see that keep coming higher. Copper's on a little run down. If we can get below here, look for copper to get back into the 875, 880 range. Real estate, that's good. Keep coming. Look at you, AGNC. Get on up. I gave you guys AGNC all the way back here as well. Told you this paid like 15, 18%. It was some crazy number down here. Paying you dividends every month. So you've collected at least 4 months worth of dividends here when I gave you this. And it pays consistently, even in shitty markets. It pays. It hasn't missed a payment in the time I've had it. And I've had it for years now. So it's up to $10. Even that is a 40% return on your money just in this 4 months. Or 20%, 24, 24, 30, 24, yeah, 30% run up on your money in 4 months, plus it's paying you dividends. That's a good one. Anyway, not that I'm telling you what to buy, because I ain't. This Goliath, what is these guys doing now? Suddenly they picked, I've held these guys for such a long time, and then they did nothing. I just wanted to see him get back to 180, and I was willing to get rid of it at 180. And now, look at them, they're up at almost $3, or they hit $3. Don't know what they're doing, but keep on doing it, folks. Keep on doing it. TSX, what's mom and dad doing here today? Oh, look at you guys. It's good. What is gold doing? 5 minute. Wait for structure shifting. See a nice little displacement down. That's a nice little. That would be if it was here. Came back into that. Maybe a nice little cam 3 that. What's the hourly look like? Well, looks like it could keep coming lower. I don't want to see gold get above there. Watch that hold there. If we can get through this level here, look for gold to go lower. Oh, pigs are stuck in the mud. Sugars finally broke out of our level between our sticks and then came back, retested the stick, and went lower. This gap's now been filled. Internal range liquidity. You want to see that climb back up into this. I'll pull the fib in here. You can see where that's going. Nice little discount here off this BISI. And we're running higher. Watch for it to close just above this, tap it. And keep pushing for a run back up into that gap. That's for live cattle. I think I'm going to stop doing all these extra charts. I think I'm only just going to do a couple of charts each morning now. Dax Alley is back inside that range here, inside here. That holds. Look for a rerun down into here. You got to get through here, find some support at this, and start running back inside that range. Look for a retest of this old high and this SIBI on the other side here. On a quick look, I'm looking down here at 87.08 for well, you wanted oil to come down. It's coming down. It's coming down. Perfectly right there. And that's the objective we were looking for. Like when I started this little stint this morning, we're looking for here. Now I want to see if that there's a nice little perfect refill of that. So get a perfect entry. There's a nice exit there, or pay yourself there. Now you want to see how it acts off this candle. That little snap off of there. We can get back through this level. Look for continuation. Otherwise, retest, come lower. Where are we at here? PC for this is the one. See where silver's going. Finally, silver's hit our upside objective. There. So where's our next objective? What is it? Up here, right? That's our next little upside objective. For silver's 41.31. See this? No, it's 1024. Get going through here. I gotta squeeze my charts down more, Gary. You see that? Look at your Scotiabank now. Love it. Laurentian, even Laurentian's had a nice little pump up. I like it. Love the banks. Gotta love the banks. Nice little entry right here. All right, let's get back to NQ. Ooh, look at that. I guess we got our 670, hey, Adi? Nice. $6 a.m. candle used. Retest this old low. See how we break the low here? Retest it right there. This perfect entry for a short. Looking for our 670. We hit that 670. Traded through it. Came back into it. And then went lower. Now looking for 645. And then looking for this discount box over here. On the 15 minute, that's a nice little retest as well right there. 693. On lower. You have this whole midnight open range here. Midnight open is at 635. The first presentation fair value, or first fair value gap at midnight is 630-ish, 632. Good morning, Ollie. Good morning, Hans. You didn't like AGNC. Fair enough. Do you classify that whole series of down candles as a breaker? Which one? All of this? What time frame are you on there, Ollie? Does a discount box in a breaker make it stronger? Like a stronger draw on liquidity? Are you talking about here on this series, all these series of down close candles? You're talking about the 15-minute chart? Yes. This one right here. They're all considered, if they're all bear candles, yeah, Michael would consider all of these, same, I would too. That's all considered a breaker, for sure. The most sensitive one, obviously, is your first one. So discount 1, discount 2. So you can draw your little boxes out here on 15-second or 15-minute. Discount 1. D1. D2. Just to retest this, drive through this, come back, retest it, go lower. We have a discount box right here. There's your D1 and your 1-minute chart from a larger range extension. And you're in that, not quite in that yet. So anything inside here, that's a draw for me. So yeah, Ollie, first one, second one, inside the breaker and a breaker, the draw on the breaker itself is a pull for me for sure. And if there's a breaker inside that, I'm game for that too. That's a stronger, I'd say yes, it is a stronger pull. Do you consider inversions better to use than fair value gap? Yes. I think a fair value gap is great. But for me, they start bumping up in terms of their strength when they become inversions. That's just my personal thing. I don't know how Michael feels about that. But once a fair value gap becomes an inversion, it gains a little more, it's more seasoned. It's a more seasoned candle, you see. And it's I think it picks up a little bit more strength in terms of its support or resistance. For example, if we have a SIBI here, see how this is just a fair value gap at this point. So if all this didn't exist, as soon as it comes out and we tap back into it, that just becomes a reclaimed fair value gap, right? But the moment we trade through it and we come back into it, see how it now becomes support, 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 really strong, and then it keeps cutting. Then you've got your run lower. So I like it for initially as a fair value gap, but when we break through it to the downside and now becomes an inversion, I think it just gains just a touch more strength in terms of the direction it wants to go. These are fair value gaps here, right? So we're retesting them. So running back inside this range or up to here, because we had a small little swing right here. If we take this one out, look for some support here, coming back inside the larger range. As soon as we break that high there, look for a run back into a higher range. So you can take the next swing point here. Because they're all down close candles, I'll just take from high to low. Pull your fib tool on that. And if that's you're catching this as a long, then you're just trade back to 50% of that range. And protect your downside, because we're still looking for this guy to get hit. So if we didn't get a perfect retest on that candle, what is that on there? Low is 693. High in this candle is 693. Yep, so that did tap that. So look for 50% of this whole range right here. So if you're short or long here, and you're running up for 50%, your stop loss is going to like sit just below here, because you've already retested it once. So you don't want to see it come back through here, because if it closes below that, then I'm game for this to come back digging into here again. Like this now starts another big run through this wick. And you got to consider time of day, 15 minutes before an open. So wait for a macro. Look at you, Craig, shorting the highs. You're welcome, Ollie. I don't know what good it does for you, but that's just my thoughts on the subject. Yes. Yes, I see you, Hadi. $62 retracement. Right onto this candle's high. We get to push back through this mean threshold, keep going higher. So if you caught this right here, and you saw that, and you go, I'd like to see it stop right there on the hourly, and I want to see it start going higher. I would want to see that down there myself. But there's your first, second, third layer right there. If you see a reversal, you say, I'm not reaching for this just yet because I have a reversal here. Catch this for the run higher, 50%, pay yourself right there. You're zero stress. You've paid yourself a portion on this leg coming higher, and you would have got in right here on your wick. So if it stops right there and comes back against you and closes you out, you've paid yourself there. That's first take profit model 1. Now we've traded through this level. You want to see it provide support, push higher. You've closed out above, or you haven't closed above this level, but we have taken the 50%. Retest here, push higher. So you're bullish inside this range, and you've hit an area of sensitivity on the hourly chart. $15-minute, we're just coming back to institutional order flow entry drill. So you see how 1 says it wants to go higher, the hourly. 15-minute says I want to go lower. I'm aiming for a discount box. I'm just coming back to retest this level. On a 1 minute, that's a targeted level that we were looking for on a 1 minute chart. So even if you're on the wrong side of this and this comes back against you, you got yourself paid inside that range. So you're always kind of looking for these higher time frame areas to say, I'd like to see some sensitivity there. Now let's get down to these lower time frames to see if I can catch a reversal into 50% of that range. If I can, I'm going to nibble at that little piece out of there. See how we've now got this little high here has been taken. You've traded back into this SIBI. You see a little change in direction here like that. So now this fair value gap has now become an inversion if we close below this. Like that. Now it becomes an area of sensitivity. It was much stronger for me. It's not just tap. See how we tapped and went through it? Then we went through it and closed below it. Now it becomes support for a deeper run back into this range. So now you pull your fib tool from low to high, and I'm looking for this level down here now. I'm just looking right in here. Now I want to see that get taken on the downside, and we get back into sync for running for that hourly objective down here, and also a 15-minute objective down there. Looked for the gap fill trade from ICT of 50 of a minute, 50%. It worked. Awesome, Craig. Nice reversal now. ICT dropped his FOMC trade information. My thoughts were similar to his on 2 stages, but he made it much clearer for me. Excellent. I have just downloaded his notes. I haven't actually looked at his video yet. Yeah. Agreed, Ollie. You should really include all of this. It's not just this little piece here. There's an imbalance here and this. So you almost have to include all of this together up to here and down to there. All of that. I'm going to leave it right there for a second. I just want to see what that, if we can get into that lower portion. So watch this level right here. We haven't got it. We haven't retested it yet, right? So inside this range, I want to see if this gets retested and we keep coming lower, or if we break back through that level and start running higher again. So that's the important thing right there, is to look at this little level here. I'm going to see if I'm watching the video game now. I'm watching the battle unfold. And this is on a Tibbs 21, so that'll be a nice little tap there and come lower. That gets through that, then we're looking for this to go higher, 27, 30, 32. Want to see that roll over and come lower. If it takes out this little thing here, look for 27, 30, 32 to go higher. Or we could get a little swing in here. 27 could be back into tapping this to go higher. It's just a little box to box inside this little range here. That's probably 50% or more right there. Nope. Just shy of it. There's consequent encroachment. I've got multiple overlapping arrays now. Here, 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 there. There's lots of them to bounce off of here. There's the full fill. There's institutional order flow entry drill on a 15-minute chart, 5-minute chart. Retest this old low. You want to see if it closes above 689, 690. That holds. This is kind of your next level of hold. You want to see that hold, keep coming lower. And you want to see this get broken to the downside. Then that 5-minute supported, the 15-minute supported, and the hourly just came back and retested that order block. We traded below it, come back, test it, keep coming lower. And we've had a run to the low here. So right now we're just coming back in these lower time frames to come back and retest. That wick that you saw was just coming for them to come back and retest their lows as well before going lower. So I want to see it close below here. So far it's looking good to go lower. You can see it on 3, 4 time frames now. Four hours just come back and filled that up close candle. Let's tap that. I like the 6 a.m. candle retest and go lower. If this ends up pushing through here, I like this area here for a retest and then come lower. If we end up eating through that on a close, then I'm out of that idea of going lower. I'd be looking for a retest up into, you want to see if this consolidation holds price then. We're through that level. So what I'm looking for is on the hourly chart or the 15-minute chart here, a retest to this level. 708 to 713, which should put you right in that 6 a.m. candle there. It's also a retest of that fair value gap. Now it becomes inversion. And this little low here sits right inside the 6 a.m. as well. So we're just waiting to see who wants to give up the ghost. Mean threshold of this candle. Holding price. Here's your 930. Hello, Sir Derek. How are you doing, buddy? B Master D, how's the things? Six seconds. Nice. Looking for here. There's the retest. It's already through it. Not what I want to see. Love 930, hey? No lows taken yet. It ran through this. Now it's running through this. If we start pushing through that level again, I'm looking up here. Get right back up inside there. That's why you wait for 930, 10 for the range to establish itself. Look at that rejection block to rejection block. Take out all high. Half the wick, 698. Then I'm looking for 700, 702, 706, then 710, 714. Wouldn't it be ironic if it just took out this high, came back, took out this low, then went back higher? It's not broken above that level. Like it did here, broke below it. You expect to see it come back, tap it, and it went through it, so you didn't like that. Went above that one, came back inside, tapped it, now looking for a run higher. This is back to these at 1 hour candle. Now you're looking for this its mean threshold at 207.12, and back into this candle's mean threshold is the line in sand at 723. There's that we're looking for 710 now. This is the edge of the BISI at 708. Now that's hit a higher time frame objective. Now I'm looking for any sign of a reversal here. So in order for that to get validated here, I want to see it break these two lows, come back, find support at them, and come lower. Preferably this one here. Oh, is that what Michael said last night? He's not expecting much after FOMC. Body trades above this level. We're coming back, find support at it. Running up into this 714 level. That 6 a.m. area, I like that 6 a.m. low. I haven't seen that video yet. Typically, though, he says big range begets small range. There's the 708. I want to see that 710 level. And we'll see what happens at the bottom of the 6 a.m. candle. How the bees doing, Derek? Yeah, all setting up for winter? Are you fattening them up, giving them enough sugar for the winter? Enough honey? There's 710. There's our level there. And I want to see 714. So that'd be right at the 6 a.m. candle. And I want to see if that gives us a level of support there. And if it doesn't, then I'm looking for 716, which is the consequent encroachment of this, and then the high. The 6 a.m. candle tells all. The low on that candle right there is 713.50. High in this candle, 713.25. That puts us right inside that little box. Now I'm looking to see if we get a change in direction here. So we start going back lower, lower. Good morning, Shepard. How you feeling today, buddy? Definitely feeding them sugar syrup. concerned a bit about mite load. I hate to do mite tests as it kills 300 plus bees, but need to do that when we get back from Spain. Wow. Is there not a safer way to do a mite test? 300 bees. So far that level's holding. Now I want to see this get traded through, find support at this. This is nice, good start right here. Keep coming lower from here. No, you don't want to run all the way up there again. Mean threshold, okay. Let's start working our way through here again. That's perfect little area right there. I'm going to highlight it again so you guys can see it, why I was looking there. Right on the beezer. I think I had a 0.25 gap on that. One's, or 713.5 I think is the high of that candle. Yes. And the high of this candle is 709.75. So anywhere inside here to right there at the just a hair short of that 6 a.m. candle. Now we've traded below that, find support at the regular. Now keep coming lower. I'm going to sell 2 there. I'm going to trust my analysis. Risk free. Pay yourself there. Let's play the rules. Oh, you know what? I'm going to let it ride. Let it ride, baby. Right there. Pay yourself on that one. I'll buy that one. That's the box we're aiming for right there. Now let the rest ride, baby, ride. So I've tapped that box there on the 15. Let's look for the regular trading hour gap to fill now. Let's let this thing go all the way down here. Hans, I'm with you, Hans. Let's do it, buddy. Let's go. Regular trading hour gap. Let's fill it. Let's do it. We're aiming for D2 now, my friends. D2. Here's a retest. Thank you very much. Half the wick. Retap the old low. Institutional order flow entry drill if you want. I don't want to see it come all the way back up into this again. Just strength is just a little tap in here, off of here. I'm all right with that for 655. But I don't want to see that fill in again. Nice midnight target. Good for you, Hadi. No long yet, my friend. There's no long yet. Hans and I want the rest of this regular trading hour gap first, then you can have your long, Hadi. How's that? We want to get paid first. So layered, there's your layered discount box, premium box, discount box, box to box trading. I gave you a perfect entry there. I didn't take it until I saw this. Got to trust that. Run lower. Looking for this box here. Now you got layered 1, 2, and 3 levels inside D1. For D2, you're looking for, again, the same 3 levels. And if you trade through that on a close, we're looking for a run lower. And I'd be looking for a run back into this immediate rebalance right here, perhaps, in this order block, equal lows. We'll see what we get. Look at the hourly. Oh, look at the hourly, says a D. Look at the hourly. Oh, look at that. Look, give us a little touch right there, Hadi, at 625, man. We want to see this give way now. All in one candle. 1, 2, 3. 3 arrays. Your ass is next. Let's hold. Hold. Pay yourself there at 626. Hourly. Good call, Hadi. It's a fill of this right there. That's what you want to see. Close below. Look for D2 now. Super D2. Now you see how this becomes a break in market structure. So my stop loss goes right there. Because if I'm on the wrong side of that, if we get back through here, see how these little gaps in that forming? There's D2. Pay yourself at D2. I've only got one left on there, so I'm going to let it ride. Let it ride, baby. Let it ride. So I gave you some perfect data points to look for. Retest. Now, let's think about something like this then. What would you do if you're expecting this to go lower and we're want to load on more? I'm not going to do that. That's getting cocky now. You got the short there, Russell. Out now. Very nice. If closed below this level, I will go for short again. But would like to see a nice reversal pattern. A D, what did we tell you, man? Russell and I would like to get our regular trading hour gap first, please. Then you can have your reversal. At least 50% of this. I think that's 50% of it right there, is it not? I don't know why my regular trading hour gap doesn't have a... there's 50% right there. So if we're using a take profit model 3, we're waiting to see if this or this trades through on a close. And then this bull trap, I want to see this act as a bull trap and send it lower. I don't want to see one close above here, and I don't want to see one close above here. Like this is internal range liquidity. That's it, 50%. You want to see it push, slam it down now. Slammer, jammer. 5. So now, if we take out that low there, I like this candle area right here. I want to see that hold price. We can come back and retest this order block here, right there, or the midnight candle one more time. I do not want to see it close above midnight candle. There's 15-minute box to box done. D2. Let's just see if we can get a close below D2. If you like that level of detail and precision, please give me a thumbs up Let me know you like what we're doing. We're here every morning for you. Like and subscribe if you're new to our channel. We're here every day for you. Nobody's selling you anything. We're here just to help out any way we can. So see how we've got a wick above here. Look at that internal range liquidity there, and I'm out. Already running through this level. We ran through this, closed above it. We started running through the midnight open. I'm out of that. So quick little trade. Now we're waiting to see if we get a body above here. So if you're looking at a CAM Model 3, sorry, not CAM Model 3, Take Profit Model 3, right there. As soon as that closed above that, you close your trade. You're on the wrong side. It's coming back inside this range. So now you're saying, that's my bull trap. I want to see that bull trap hold. And if you see it start to rip right through 3 different arrays in one, your ass is next. So that's quick and down and dirty, my friends. Right to discount box number 2. Look at that nice little kick off of there. Box to box on a 15-minute, my friends. Let's see where we go from here. Venom model. I haven't seen this new Venom model. What's this Venom model? That's an ICT term. I vaguely remember hearing about it, but I don't know what it is. Tap that. Let's start going higher from here. That 15-minute is a Venom model. Box to box. That's my box to box strategy. I don't know if that's Michael's Venom strategy. When did that come out? Did that come out in the last 2 years or 2 years ago? Later than 2 years ago? No, I want to see that start reaching for this 703. Back into the breaker. Keep pushing higher. Yeah, it's a sibby straight to a bissy like the fangs of a snake. A sibby to a bissy. Oh, to a bissy. This thing here? A sibby to a bissy. So sibby to a bissy? Okay. I gave you this sibby here. If he's giving you sibby here to a bissy here, I gave you a bissy or a sibby reversal right here to a discount 1, discount 2. So you got some pretty laser precision on my box to box strategy right there. Not that I care. If it's Michael's, it's Michael's. I don't care. If it makes me money and it makes you money, I don't care what we call it. Now I'm back inside this range here and I'm looking for back here. 654. Immediate rebalance. Yeah, I guess it could go higher from there too. Get through here, get through here. There's a retest. We were through it, then we dropped back below it, retested, come back lower, coming back inside that range. Now you're looking for 668, 654. Come on down. There's 654. Tappy tap. What? How can you have the areas of sensitivity like that? How can that data point be sensitive? Now, let's see if we trade through it. Let's start digging into this busy now. So on a 1 minute chart, that hit the bottom and then went back up inside a premium. Oh, this is a 1 minute chart. Like a 1 second chart. Going inside of it, using a minute as a range. You're pulling right back up into that 50% of that 1 minute candle on a second chart. And now you want to see that roll over and come back lower, or up into the wick or retap of that regular or that first presentation and start coming lower. And I'm looking for a retest of this candle here. There you go. There's the retest. Now, are we going to start pushing back higher, or are we going to eat into this wick or this candle here now? There you go. There's 50% of it. 643. And if we eat through that, look for a retest inside this SIBI and this D1, D2 on a 1 minute. And then we're starting to head back down for our run below those lows. I'm trying to grow a mustache and a beard. I can't really grow a beard, so I have to do this little goatee. My wife says, you probably do a goatee now. But I can't stand all that. It just makes my face itch. But I'm going to try. I think I'm old enough now to try and grow my first beard. My little goatee. I can't get much underneath here. We'll see if we can get through this little breaker here. Ollie. Midnight open range is being hit. So watch. I'd like to see us get through that midnight open candle and that first presentation if you want to come lower. That happens to be the consequent encroachment of the first presentation fair value gap as well. Strange how these little data points overlap. People don't even look through all this stuff. They go, this is all just noise in here. But it's not. It's not. They're little data points, and if you keep your eyes on them, you can see how the candle or the algorithm uses them to leverage lower, higher. But somebody will say it's luck. Somebody will say it's not consistent. You got to get through back to discount. You have to get through the pain barrier. I have to get through that itch And there's one in the corner of my mouth here. It's a sharp one. It just sticks right into the very corner of my mouth. It irritates me. No, she's not, Derek. You're so true. The question is, my mom will go, I don't like that. You should shave that. It's funny because Carla's dad's the same way about her hair. He doesn't like her hair long. You should cut your hair, make it short. It's because her mom had that. So we're back through this level here. We're not getting this lower for now. Let's see if we get back up on top of this first presentation for Rally Gap and start moving higher. We're just trying to stay on the horse here. Looks like for one more price leg run higher. You might get your equal highs taken here, Ollie. We'll see if this acts like a bull trap. I noticed Michael called a bear trap the other day in one of his videos. It's like, oh, he's using the old terminology, the bear trap and the bull trap. But I don't think he looks at it as the same way I do. I look at a bull trap or a bear trap like that would be a bull trap. If we can get through it, then the bull trap's not fired off. You're safe. Carry on. And that's not to say my way's right. I am not saying I'm better than Michael at all. So please don't look at it like we've just got a different definition of what I'm using. So in other words, if you hear what I'm saying, bull trap or bear trap, and Michael has said something different, go with his. Don't go with mine, go with his. So this little one right here, you want to see a body get above that. On a close. Look at that. Hey, what a beautiful little run to discount. Change in direction. First candle to the left. Body trades above it. We came all the way back inside it and then went higher. My mom gives me a look too. You have to enter the beard and hold the position. That's right. I remember whenever we at the fire department, you have that Movember, so you have to grow a mustache. See how we're retesting this first presentation now. We had to grow a mustache, and all the guys would have these really thick mustaches, and me, I had this like puberty type thing happening on my face, and so I'd always kind of nip it into this little thing called a David Niven. I don't know if you guys, some of you are going to remember who David Niven, but I used to do this little, I'm like, no, it's my David Niven. That's the only thing I could grow. Everybody else, guys were killing it. We had a little mustache contest, and they'd look at me and they'd just roll their eyes like, one day, kid, you'll hit puberty. But I used to have this little David Niven right there. That was it. That was my Movember. Show me the 10 a.m. Sibby, says Russell. I do like the opportunity up here next, my friends. That's already been tagged. I would say right here. I'm going to put a little box right here. Right there. See how we do on that one. And then I'll extend it to here at 743. See how we're finding support at this? Mean threshold. Broke through. Come back. We've now got a body that's traded above this candle. We've traded back into it. Keep pushing. Look for this level right here. Nice reaction off of 42 and 43 candles. Got an entry off of them. 4-2. You got an entry down here. Good for you, Ollie. If you bought in right off my discount box here, good for you. So again, the first thing you look for is on the higher time frame. If you hit that objective, the first thing you're looking for on the lower time frames is your reversal. So you see a reverse right here. Body did not close above here until here. Then you look for this candle or this to get retested. It doesn't retest there and runs all the way through that level. And then you look for the candle to the left and that trades through there. So you're looking for a retest on this one. It runs through, look for a retest of that one. Now you're above the 50% or 50%, you're into a premium. So unless it comes back to a discount, you're not interested in it, or until it breaks that high, then you can catch that for continuation. And it does. It comes all the way back down to our discount and then gives you your run higher. And you look for these levels to provide support to continue pushing higher. That's your next objective. And then your next objective above that will be right here for a box-to-box trade. That's P1. That's P2. Right back to 830. Hadid's 830 there. There's your first objective hit. Yes, sir. 62% hard to long there. Look for first presentation. First presentation fair value gap. My man, Cody. Good morning, Cody. How you doing, buddy? How's the computer programming world? You should just put your moniker there as just ones and zeros. Then I know it's Cody. Bench trader, need to close about 15-minute fair value gap. Yes, if you want to go longer. That's a nice little box to rebox. So you've gone from box, premium, discount, premium. So box, this is like 3 rounds of boxing. 1, 2, 3. You're through that level. Look for this level up here now. You want to see if we can get a body above here first. And now this is that bull trap we're looking for. If that freezes on there and turns around and comes back down again, bull trap's holding. So you want to see it now close above this level and close above this little consolidation here and use it as support to run higher for this next objective. Way to buy it. That week is so beautiful. Yeah, I think I'm done for the day. I caught that nice little run down. I caught a run up this morning, a run down this morning, and then another run down this morning. So I think I'm done. There's the next box. There's your P1 box. Objective hit, P1. Nicely done. Right to the tick. 747. Love it, love it. Now let's see if we can get on top of this and start running for that 830. And we want to see it close above here now. Not just a quick liquidity run. Where's my promised silver bullet? You got no silver bullet there yet, my friend. Unless you look at this one right here, which is 10 o'clock, 10:02. There's the 10 o'clock right there. It comes right into there. That would have been your silver bullet institutional order flow entry draw. Ding. And leave. A all-time high incoming. We'll wait for A plus setup. I was off first. I'll get there. It was off the first presentation for value gap. Yeah. No, it's going for first presentation. That's my opinion. Thank you, Darren. You opened my eyes and really amazed to see how your strategy works. Thanks. Thanks, Adi. I appreciate it. See how we closed above bull trap, and then we use the bull trap to leverage higher. So we break above it, find some support, push higher. You hit this next array here. Now you want to see us climb through this, and then I'm on this with Hadi as well. So you've had multiple box-to-box trades this morning. And if you're savvy enough to catch them, you would have caught a nice little run lower, then the run higher. We get through here. Now you're looking for 734. If we can get back above that level now, I'm looking for range extension and a new range high. That's too small for a 65-year-old. Gotta be bigger than that. It's too quick for Derek. He wants to see it come back with some oomph, some gusto. I'm out for the day as well. Take care, folks. Thanks, Darren, and all. You're very welcome, Ollie. I wish you all the best, buddy. Have a safe day. Don't be greedy. It's already been a great day. Yes, indeed, it has. Derek is a young guy looking for short waiting. All-time high. There you go, man. There's your continuation. Run through that level. We want to see it run to the next level. It trades through that, takes out the high. Above it, runs to the high. Now, we're going to tap this level. I want to see a body get above here now. So give this a little tap first, and then still keep pushing higher. There's the 830 tippy tap inside the premium. Now you want to see it stay there. It's already run the high out with a wick. So you want to see it tap this and start pushing through a body above the high here. If it starts to get through this level on a close, then just say, look, I'm on the wrong side of this. I don't want to see anything get below here. And anytime it takes that high out, you always got to look for that first presentation. Not first presentation, that first fair value gap that occurs. Now, if it occurs above the high, that's a stronger indication to go higher. If it occurs below the high, I don't have as much gusto. I don't have enough drive for that. So now we've traded below this level, and now we're using that for support to come lower. So now we could get a big run all the way back down into this range right here, 50%, 62%. So it's got to get back above that level or close below here as well. Your first level's done. You traded above it, took the high. That's what you wanted to see. Trade below it now, trade back into it. Now I want to see if this level here finds some support and keeps coming back inside that range. Because we want to see that level there give way as a sign of change direction. If it supports it, then you want to see this mean threshold of this candle give way and start pushing higher. See how its mean threshold is stopping it? And it's inside this premium array overlap, consequent encroachment of this lining up pretty close to the mean threshold of that candle. Watch right here. Yes. I agree, Adi. Just keep your eyes on this one right here. And then you're starting to look for what's 50% of this range. Does it line up with this level right here? Do we find support at that? Are we just running back into this SIBI? See how we got a BISI SIBI overlap? And if we get this close on the 15 minutes, so in the next 58 seconds, if it closes above that level, then and then closes above there, you're looking for that to provide support to go higher, and this to provide support to go higher. And that mean threshold, we're looking for the next candle on the 15-minute chart to break this high here with a close, not just a wick. So you can say, yes, it looks more bullish, but if we start to trade back through this level, see how it starts to lose its percentage of wanderlust. You want to see that just keep pushing higher. Now it's already rated that high. You wanted to see this close above here before it took that high, come back, find support in here, then make the run higher. The fact that we've taken that high already makes me go, okay, so now we really got to use a very sensitive level like that right there. It's got to tap it and go, just use it as support all the way back to the consequent encroachment of it. That's all, which would also be this SIBI here, which is now inversion. So I want to see that no more than 726. 726 and tap it and go. Like if this has really got some strength now, mean threshold right here, don't even bother coming back into that. Just super strong right there. Not so strong right there. Weakest right there. And the ultimate weak one would be the mean threshold right there at 723. Then you look for these 1 minute charts and you say, where am I still gonna find support here? My A plus would be that one holding. A plus would be leave from here. Just leave right there. Hold that level and go. So if that is going to hold, then you want to see that climb up on top of there, find support, and keep pushing. That's your A plus continuation. Literally opened, it closed below it, opened right on it, came back into the close and ran into 50% of that wick. Keep pushing. Or if it stalls, tap and go some more. Hopefully you guys have enjoyed our show today. You've enjoyed some crazy ass detail and amazing precision. It's been available. It is available to you if you stay on the horse and you practice in these 1 minute time frames. Imagine if this was a daily chart and this was a month's worth of running, or a weekly chart, and you caught that right there on the weekly chart, or you caught that level we were looking at here to here, and that was a whole week, 2 weeks to run to that level. It's the same thing, you guys. You look for that on a weekly chart and you wait for the day to happen. So if you're seeing this come up into here and you say, this week, if it just taps that level, I'm looking for a 4-hour or daily reversal here to form to catch my short. And right there, you'd be looking for your hourly chart to come back into that. You said, great, I'm going to go short. Or like I did right there, traded below it. I'm going to trust it, keep coming lower. Then for the rest of the week, you just run back to your objective 1, objective 2. Then on the Friday, you watch it reverse. Monday, Tuesday, trades back into it, and off she goes again. No different, man. No different. There's the 8:30 retest. Let's go. So Russell, you were talking the other day about there's got to be a way to find consistency every day, right? Now, when you find these salad days like this, They make up for all the days that you sat and waited. Because big salad days like this, you can just catch your big runs, move to the sidelines. It will more than make up for those days you waited. So if you're looking for a $500 day the other day and you just made $2,000 today, that's equivalent to waiting 4 days for that perfect setup. And then the pressure for $500 a day disappears. And you just wait for your entry because there's enough of them there. And like Michael says, they never stop. Every day, there's always something in the charts. There's something clean. And if it's not, wait for the next day. It's coming, man. It's coming. I don't want you to feel pressured. So I want you to feel relaxed. When you're trading, I want you to think about it like a business and that you're a businessman doing business things, waiting for your opportunities, making your phone calls, bringing in the business. And then when you see it, you see that's a good deal. I'll take that and trust that the deal that you're doing is the right one. Like that little trade I took here this morning, I said, I have to trust that that's going to head to the direction I want it to go. All right. You just got to trust it, man. I gave you this level right here. See how it's supported? Then we look for that. We want to see it trade above it. See how it's found support at it. It's taking that high. Pay yourself. It may not be $500, but at least you're stress-free right now. And you've made a bunch of money on the other stuff as well. You just got to trust it. See it enough times. And you get in here and you wait. You watch these charts and you watch that price action. And you say, this is what I'm looking at. I want to see that high get taken. Good. If I would have gone in long there, I would imagine myself getting long there and I'm taking that trade. I'm rewarding a good business sense, a good deal that I found. I bought a stapler and I bought a stapler for $20 and sold it for $50. It's like that guy who took a paper clip and bought a house. He just traded up. I don't know if you ever seen that guy. Anyway. See, we're still going higher. Now you're sitting there laughing at yourself and you're thinking, whoa, what am I looking for here now? Every time you make a new high, you look for the fair value gap to form and give you the opportunity to see a reversal. This would be a market structure shift, right? If we trade back through this. So think about that as it's climbing higher and you look at these levels. So if you're already break even, you've paid yourself there, it's a zero stress trade now, because now you're saying, I don't want to see this candle get traded back into. All three of its levels get traded back into. Chances are we could get a little structure break here and run lower. So I want to see that provide support here and keep moving higher. Does that make sense? I just want you to feel relaxed, Russell. I don't want you to stress out, brother. I don't want you to stress out. Trust and follow the rules. Follow the rules. True that. Money will come. You know, though, the hard part is going for 20 to 25 years with a steady paycheck every week or two to 1 week of $100 and the next 1,000 and the next minus 500 is harder. You're absolutely right. That's why if you're getting in this game, you got to be prepared for sudden changes like that. It's the difference, Derek, is that when you went to work, it was a steady guaranteed income. This is not guaranteed. This is going to take a lot of work. So the whole mindset has got to be different. If you're using the same mindset you used when you had a steady, safe income coming in and expecting that in this market, you're in the wrong market. Or you're in the wrong way to make money, because that'll never happen. That'll never happen unless you get to Michael's status, of course. But you see how we got that change in direction already? You'd be out of your trade. You would have paid yourself there, and now you're out because it's making a turn. Yeah, you can't use the same principles. And I know it's hard. It's easy to say that because it's conditioning, and we are all Pavlov's dogs, man. We are all conditioned creatures. We do what we We do what we respond to day after day after day. You do that for 20 years, you get a certain mindset in your neurology. It's no different than people who talk negatively about themselves, and then 20 years later, they have to change that mindset and how hard it is to constantly look for the negative in things instead of the positives. My wife is amazing at that. She spent her whole life looking for positives all the time, and it's just part of her neurology. It's just part of who she is. She has to look for the positive. She always try to find the positive in something. Regardless of how shitty it is, she tries to find the positive in it. And me, my whole career has been built around the underbelly of society, getting to see the worst parts of society, the worst parts of humanity, what people do to each other, what they do to themselves, and the choices they make. I spent 34 years in that career. So I've kind of built a more of a pessimistic view on life, but she's slowly turning me around. You got to change your mindset. Change your mindset, folks. Just wait for your setup and follow it. That's all we need. Don't you agree? Done. Have a great day, all. See you later there, Hadi. Craig is still looking for a short. Thank you, Darren. You're welcome, Hadi. Yeah, the weekly standard deviation from your daily trades will be large. Just the way it is. Yeah, I'm now doing this about 10 years, and still on occasion I get frustrated because I have a losing week at times. Ugh, Derek, you're not alone, brother. There's sometimes I'll just sit there and I'll take 4 or 5 trades in a row, and I look at it and I go, I am doing this. I'm making this mistake over and over and over again. My impulsiveness, I get impulsive at times, and I just go, I'm just throwing money away. I got to walk away from the charts. And then that need to fix things is a driving thing for me. I have to fix it. So I tend to stay in a little longer. And if my mindset's not right, you get beat up. See how you change direction and you came back, tap this old premium box again, trade through here, wait for this level to get closed above, come back, tap it, and go higher. Wait, have I got the right one? I gotta make sure I got my, no, my sound's not, I think it's a different one. She's funny. Gotta love that girl. And away you go again. I don't like red weeks either, Derek. What? Why don't you like red weeks? Red weeks are great, man. Red weeks are just like paying you in the opposite direction, man. That's all it is. Waiting for short indices. There's Craig's. You get your oil long this morning? Craig, thanks, D. You're welcome, Craig. Let's look at your oil. Let's look at Craig's oil. Craigslist for oil. Hey, did you make up that? Are you on that Craigslist? Are you the designer of Craigslist? Okay, here's your 5 minute. 5 minute change in direction. Right there. We've taken out this high. I like this here. Trade below it. Run into this discount box. D1 would be somewhere around here. D2 is here. And then let's see if we can get below this and look for another run down into our 63.70 level. 1 minute change in direction inside this range. Watch for this order block to get taken. It does. It's 50%. It's taken. Come back, find some support at that level. Ooh, look at that. It closed below there. You need to see this. I'm not form fitting this here. That low right there. Did it take it? Yes. Did it open on it? Yes. Go lower. Now you're looking for this whole candle to provide support. It can come all the way back and tap this one here. You do not want to see it close above here. So where would your stop loss be? Where would your fail safe be? When you guys are looking at this stuff, ask yourself, where is the fail safe? You've got to have a fail safe when you trade. If you don't know what a fail safe is, go to my video. I made it. This is my whole idea about a fail safe. If you understand price action and specific data points you don't want to see broken, that's your fail safe. In other words, my stop loss is going to sit. Let's say you put your stop loss way up here. When do we know that stop loss is under attack? Is going to get attacked? Do you want to take the full loss and ignore all the potential times you could see it climbing all the way back up there to finally take your stop loss and go, damn, it took my stop? Well, it showed you it was going to take your stop a long time ago. Where's the failsafe? If you don't have that kind of level of accuracy, stick around, man. There's the retest. Look at the range you're in. From low to high. You bought it at a discount, not at a premium. So I want to make sure it didn't get back through that mean threshold now. You've tapped it. This is an institutional order flow entry drill. You can come back into half that. That's it. That's all you get. 50% of that thing, tap it, roll over and come back lower. If it starts to get through that, takes out this little high here, you're on the wrong side of it. Don't worry about your stop loss. It's coming. I guess it would be this guy here, buried inside that guy. Yeah. I don't want to see it get through there. Mean threshold has to hold. My stop would be just sitting just above here. That candle, one tick. And see how you've broken below this, tapped it? You want to see it leave. This whole candle going back into it, not what I want to see. There's the mean threshold, 50%. Better come lower. Better come lower. Now, if you can get back to this candle's open, or 50% of that, we get through that, and this candle's open, I'd move to break even, just because I wouldn't want to see it revisit this now. It's got to get this half this wick here, because now this has been a validated candle. It's tapping its high. You don't want to see it. See how it's just starting to climb out of here now? I don't want to see that. I want to see it just keep coming, eating into this, eat into that, eat. Mean threshold, 64.33. MK2 looking to hit weekly volume and bounce. Come on, dig in, dig. MK missed crude trade today. You missed the crude trade. So on a 5 minute, you'd want to see that come back to 64.36. You want to see it come back to that level. See that there? So you want to see it come back to that, tap it and go lower. See how that mean threshold has been lost already? I like that. That means we're going to come back and revisit lower. I'd like to see this retest 64.21. But it can come back into that, I guess. Tap that, come lower. All of this in here is fair game. We could get an ugly reverse off of this level here. You do not want to see it on a 5-minute chart get above 64.43, which would be this candle here. See how it's just waffling here? Let's go. That's it. Drill through that. Mean threshold. Give me a little kiss off of 64.28. D, would you look at the indices one more time, please, for a short perspective? Sure, I'll do that. I can do that. Which one do you want? NQ still? For a short perspective? Oh, merciful heavens. What do we got here? Gotta wait for time and price now, Craig. Yeah, change in direction, market structure shift here. I'd want to see this and this get taken on the downside and use this as support to come lower inside this range. And you're just hunting internal range liquidity. And if you take out this low right here, look for a run on these equal lows. Yeah, there's right now, I like this. Give it a retest. We've got a no wick. We just got wicks below here now. Always draw this out, Craig. Draw that out like that. Now you want to see a retest of this level. An institutional order flow entry drill would be just tap it and go lower. And we're looking for this box right here. That's a box-to-box trade. And it's a small little internal range. You may not be interested in that kind of thing, but dang, it's there. It's available. That little low is taken there. We traded in. There's this SIBI right here. We traded back up, filled it, and now we want to see it come lower. Wait for a body to get below here. Stop loss will be sitting up here. If we get a body below that, sometimes I like to just put my stop loss one tick above that because I want to demand that that candle hold price and keep pushing lower for this, especially inside here. You look at your range, look at your, if you're doing a take profit model 1, look where you're sitting right now. 50% is literally right off that candle there. And you're looking for 70, 72, or 75, and 78%, 79%. See how they're all that level? Is that just weird or what? 70, 75, and 78% are the 3 levels of the SIBI, the discount box. Strange coincidence, you say, perhaps? Who knows? Just lucky. It's just luck, man. Just luck. See how we traded below it right there? Boop. Tap it. Come lower. You don't get an institutional order flow entry if you're using the SIBI, but if you're using my BizC, you get a nice perfect entry. Box to box trading right there. Small little range. Dusted. Now you want to see if it gets below here. Find support. Man, we're doing some crazy detail today. Crazy detail today. If you're new to our channel, subscribe, man. This is kind of crazy. This is when price action starts to clean up. You can nail this. You can get such great salad days. if you go in, once you see price action hitting these key levels and reacting off of them and going higher and not getting that chop that we're used to seeing in the market at the open, you can catch yourself some delicious little runs. And I'm talking some stellar details. So hit like, subscribe. We're here every day for you. That's a box-to-box trade right there, man. Sorting NQ till first presentation. Stop at the high. I'm in short. You're short now, Cody. Wow. Yes. MES. Oh, MES you want me to look at? You see how you've traded through this level? Trade back. Tap it. Tap it. Tap it. There's 3 levels there. Stop loss would be sitting right above there. Would have hit you. Taken you out. That would have taken you out. Wick would have done the damage. If this still closes below here, that kind of wick damage, unfortunately, is name of the game, man. Now you got to wait. You got to wait for a body to close above here, or you've got to wait for a market structure shift, a body to get below here, and there's no body below there yet. So if you're just looking for this to short from here on MS, or MES, you may have still been out if you would have had your stop. No, what's the high of this candle? The high is 61.50. The high of this candle is 62. So half a handle. That would be, no, you would have been okay. If your spread is really only 0.25, you would have been fine right there. You'd still be in this. Now my stop would be sitting right on the top of that because you got equal highs here now. That's an hourly chart. 1 minute chart. Let's look at a 1 minute chart. 5 minutes. Nice. All these highs are taken. See a nice little 5 minute retest of this here. Right there. And if it doesn't, we get a close below this. Look at this candle, and it's half of its wick as support to keep pushing lower. Look for this discount box down here, that first presentation for value gap. That's a short inside this range. They're all nice big up close candles. Nothing's in the way. That'd be a nice little 50%, 60, nice little internal range liquidity hunt now. If you can get a retest of this, stop loss will be above 50% of that wick. And you want to see this trade back inside this small little 5 minute range. Pull your fib tool on that. There's 50%. 62% brings you back into this little consolidation here. And this right here is a cam 3. Typically you would have seen it come back sooner, but let's see if this trades back in. If we go back through that on the upside, then we're going higher. This would be I would start to look at this as the next price leg. If we close above there, like let's say that was it, I'd expect to see we get on top of this, start eating through this wick and get on top of these bodies and these candles here, then I'm looking for a run up to there as the next price leg. But right now you're looking for a change in direction. I like this. I like this. That's a nice little drop below, pop below right there. Right there is good. All that's good. This could run up into here. Box to box, right? It's very helpful, Darren. Thank you. You're welcome, Rez. Remind me how low is the MES target. That would be my first target right down here. If you're doing take profit model 1, you do your 50, 62% all the way down using that rule. Scale out. take profit model 2 would be box to box trading. So you want to see that come back into here, catch that, run for a box to box. That would be a model 2. A model 3 would be wait for the first SIBI to form and get broken to the upside with a close your trade. Okay. So see how with that level there, we said right there, that's all entry level stuff right there. Trade it right back through it, into it. Look for 50% of your range. Pay yourself using take profit model 1. That's my first target. Or you could look at this 1, 2, 3. If you're disciplined enough to say, I want to trade back to that level, pay myself, move to break even. So that entry we gave you there, go to break even, pay plus the cost of the trade, pay yourself right at there. Nope, 44. Give it one little kiss. Now you break even and you give yourself a little profit. Look at 50% now. If you're using the BISIs as a form of payment, it's high, it's good encroachment, and it's low are your 3 layers of scale out. These morons. Hello? How are you guys finding this information? Is this helping you out? You're slowly learning this stuff. See, Craig, yeah, that's why you got a master's degree, because you got the mind, man. You got the mind for learning. And I tell you, this stuff makes you look like a wizard if you get it, if you study it, and you get good, clean entries. When the market's clean, oh man, I tell you, it is delicious. Delicious. You just got to wait for those days. Wait for the days that pays. Don't forget, we can still get a retest of this. This is still bare inside this range all the time. We are staying below this level. And now that we are into this candle, I like it. Retest it right there. Come lower. This is clean. If this just goes straight down from here, that's a nice little data point tap all the way up to the mean threshold of this candle. Or sorry, the consequent encroachment of that wick, I should say. And there's the retest of the consequent encroachment of the wick. Got to go down now from here. Strongest, strong, weaker. And then you get all the way back into this. It's weak if it comes back and retests that. And if we get through that bottom, consequent encroachment, all those are important levels to look for. So you heard me talk about this candle and its wick. We want to see a body get below it. Then we look for its mean threshold or consequent encroachment of that wick as the strength, and you want to see it keep coming lower. We found support here. This is good. Don't come all the way back into that candle. I like this. Keep coming lower. Look for 50%. Pay yourself there. No macro. 850. Or you got 2 more minutes for your macro. That's enough. Good for you. The days of wine and roses. The days of wine and roses. Doo-doo-doo. Okay, so we are through this level. We're finding support at that level, but now we've got a low taken. See how you can get this conflicting points of view here? This one here. Yes, the macro is beginning. We see this trade below it, through it. So you got to say, I got to wait for market structure shift. I got to see this get taken. It does. Now you say, great. Now that's been taken. I want to see this level provide support to go lower. See, it goes right into it. You get a wick through, takes out that little high. You go, that's not so good. I want to see this start running down. So you see it start running down, and then all of a sudden it comes back up and finishes here, and you go, this level right here, now that I've swung below this low here and that low there, we're going to change in direction. This is providing support to go higher. And I want to see that level get broken now on the downside. And I want to see that level provide support. And you're also inside these businesses. So you see how they're all kind of overlapping and you can get conflicting points of view. Then you start to add them up. You say, well, this one is support. This one is support as long as it doesn't get broken. And this one is support as long as it doesn't get broken. It gets broken, you go, no, that's 1 to 2. I got 1 that says it wants to go higher. I got 2 that want it to go lower. So now you got a 2 to 1. Now I was saying to myself, what's the candle to the left of it? This has to get broken. So if that gets broken, it breaks this, this, and this. Gives me my upside run to that level. That's my bull trap. I want to see bull trap hold price. All those people who want to see that go higher, I want to see that hold. It's mean threshold is holding. So I go, that's all good. Now give me this level here, close below that. And now I'm back into 3 bearishness on top of a bull trap. So that's how I kind of look at all those levels. And I say which ones are strong, which ones support my idea of going short, which ones start to break down. Where does my fail-safe come into? So you start to get all these overlapping arrays. And I know it's more of an advanced way of looking at it, but it really is something you got to kind of take in the big picture of that area. See, we come back, find support at this now. We've broken below it. So now they're all of them are in sync for this to go lower. If we run back through this level, again, I'm looking for this. This is just a whole that retest. I want to see that level get tested and then start to break down, come lower. If that makes sense. Watch right there. Right there. It's 769. We've hit it again, 769. Come on, roll over here. And this is unfortunately the chop and the shenanigans that you can deal with. So we got a retest this level, retest of this level, and a retest of that and that. All of them are just getting, they're all in sync now, and they've all been retested again. We want to see it go lower. There's your rejection block. Pay yourself there. If you got in there, pay yourself there. And move to break even, or just move to above here. You say, I don't want to see this get retested again. No, it's got to go lower. Does that make sense? Or am I just, did the narrative make sense to you guys? Or did that seem like I was just trying to form fit something there? That low is taken now. Good. I figured you might like that, Cody, because you're a technical kind of guy. Your brain is into that technical stuff. Russell, you like that? Good. Love it. Love it. Love it. Love it. Good. As long as it makes sense to you guys, and I'm not just I'm just trying to build that whole idea of why these levels are important and where they're going to fail for me. If I want to keep coming lower, where they fail and where do they get supported for that narrative for it to go lower, right? So that low has been taken. Again, you pay yourself at that little low. You may go, I'm not going to pay. I'm not looking for a trade there. That's way too choppy. I want bigger stuff. Then go to a higher time frame and wait for something bigger. If you've got a SIBI right here, there's a fair value gap, institutional order flow entry drill. Roll over. Now you say, good, I want to see this 5-minute chart now. I want to see this hold price, and I want to see that candle there get broken to the downside. It does. Those 4 levels, I want to see those 4 levels now. When this candle closes, I want to see those 4 levels hold price, and I'm running back inside this range for 50, 62%, so on and so forth. And we're just looking for the 1-minute technical. We're really digging into the technical diggins here for that to run lower. And the 5-minute just says, oh, I want to see that SIBI hold, that little fair value gap right there. I just want to see that hold price and come back into this range. What am I aiming for? What would you guys be aiming for in a 5-minute chart? I won't give you the answer just yet. Tell me what you're aiming for here. It's Goldie. Good. What level? Tell me what over here am I looking for to trade into? What method would you use to run this liquidity internal range here? Who's going to answer the question? Anyone? Bueller? Anyone? Anyone? Okay, so the first thing you're looking for is right here. You see this? You want to see this level give way on the downside. I like the fact that that last mean threshold candle has been broken, but it's in line. Anytime I've told you in the past that if you have a candle that forms the fair value gap, which is the highest candle, and it forms the top of the fair value gap, you have to use both of them and use all of those. That's the breaker for all of it. So you want to see that level right there at 740 get broken for a continuation on a run inside this range. This is great for support, but if it just comes back to here, taps this, runs up above that candle on the high, then we're looking for higher prices. This is just the next price leg higher on a 5-minute. So we need to see this level get broken first. As soon as that's broken, I'm looking at this candle next. That little tiny guy right there. And I want to see that get broken to the downside. And then as soon as this and this and this, that's like, it's not P1 or D1, D2, because you have to draw this whole. So D1 would start right here, about halfway through this one right here. There's D1, D2, and D3 is down here at 70%. So watch that level. And we've already seen it up here, right? We've already proven it out. There's your first entry right there. It traded through it. You go, okay, I've got to allow for a run back in here. That's my bull trap. Next bull trap, I want to see it get traded through. It does, comes back, taps it. Get another short. Pay yourself there. Leave the rest on. We're at zero stress trade now. And we're eating through that level right there. See how it's eating through it? Done and dusted. Looking for this level right here now. Tapped. And if those are levels to pay yourself, if you've got a big enough order on there and you're paying yourself at that, then so be it. But we're looking for 50% of that range now. We have 12-minute till down URUSS. I'm in demo trade short now, working out nice. 2 micros. Now, right here, Russell, you see how this is supported right here? We've got a body trade below it. We come back in. You want to make sure if we come back, you don't want to, you see it, just tap that and keep coming. But watch, if I pull this out from an old set of support levels over here, we want to see them get broken. You can come back in, tap them, roll over and keep coming lower. So now you look at this, see this here? Now you've taken all these lows, your mind, your eyes instantly go to here and you go, I look for the fair value gap after taking a low. If I trade through that on a close, I look for the bear trap or the bull trap to the side of it. So the very first candle to the left, I look for a bull trap and I want to see that bull trap hold. In other words, I want to see its low, its mean threshold. And if they start getting all traded through, you go, I'm on the wrong side of it. Wait for a retest of this and then go higher. Wait for the bull trap to stay frozen, doesn't trigger. And then you keep going higher. Look for the next immediate rebalance. Little tiny imbalance right here. Next bull trap. Get on top of that, then run for the premium. See that right there? Trade back into it. Short. 9 a.m. Drink some water, it says. I got a new watch. It tells me when to drink water. There you go, Russell. 703, man. Why are we in a different number here? I got 704.5. I'll be right back. Yeah, we traded through that level. Candle to the left. Am I live here? Is my mic on? Hello? Yep, my mic's on. So see how I said, see how that candle right there? We wanted the candle to the left. Remember, I told you, if you see this swing, you look right here. And if you see a body trade through it, and it did here, and then it closed above that level, you go, I'm on the wrong side of this. And what does this one do? Comes back, trades into it, and you go higher. That's how you can just stay on the horse, man. And if you're on the wrong side of it, we're looking for that 50%, right? We're looking for that down here. You got to abandon that idea. The moment you see it starting to change direction on you, got to abandon the idea until it trades back through that level. Then you can go look for the 50% again. So this is why fail safes are important. This is why fail safe is important. You'll know it fails for you if we start to trade through this mean threshold, trade back above that, then you know you're on the wrong side of it. We're coming back into this range again. Get back in sync with it. That's why fail safes are important. If you just put your stop loss up here, you just got ran out and taken. A retest of this. If you lose the mean threshold of that, look for a retest of this. And if you lose that again, back in sync, look for the next price leg lower. And you're looking for down here, look for 50% again. So unless you're willing to put your stop loss way up here and leave it and want that to run lower, just know that the first indication was right here that it wanted to go higher. There's this whole level again retested here. See how they kind of start to overlap and you start to go, I've got to get above here. That puts you above that candle to continue pushing higher. Immediate rebalance, trade through it, retest it. Now I'm between this small range here of this immediate rebalance, this SIBI, and this little order block here. There's the retouch on the top. Climb up through here, or drop from here back to here. Look for this to be your next price leg higher. Whip back into it. It's getting choppy here. What am I in? Am I in NQ? Yeah. See how it quickly ran down to that discount box? Equal highs. That's validated. We're running through it. Choppy, side to side. It's starting to get sloppy now. Price that is getting sloppy. It's now 11:07. 11 o'clock. What do we expect at 11 o'clock? Change in direction. So if we want to see this continuation of the highs, this has got to get broken to the upside for continuation, and look for 12 o'clock to create a new high. And if it keeps going higher, just keep always, like Michael said in his first video, how do you trade old highs? You just keep trading it until proven otherwise, until you get a solid reversal. They were above that level there now. Give it a little tap, start going higher. Remember this little candle right here? Look at that right on it. Now if I split this right up in here, I'm going to stretch this right out so you can see the mean threshold of that candle. Right there. Then we squish it all the way back down again. It held price, the breaker, first candle, mean threshold, held. Now you want to see it climb up on top of this candle here. I want to see 778. Close above 782. On a 1 minute chart, you'll get confirmation with a close above here. Find support at this candle, push through, and look for that level to get taken to the upside. You're still shorting this, Cody? It doesn't look short for me right now. You're inside this range here and you're on top of the bull trap right now. So I'm expecting more of a run into here, into this premium box here. I'm not expecting a short right now. Inside that range, I'd expect to see 762 get closed below. Take this and 762 on a close, then look for here. If you get below that, then you're coming back into 50% of this range again. See you later, Rez. Yeah, I think I'm going to close her up too. It's my favorite time, 9/11, 9/11, man. It's the time for the paramedic to leave the bus. 911. Okay. That's it for me. I think I'm going to be out of here now. Hope you guys enjoyed this run today. I gave you lots and lots of really cool entries, lots of precise detail today. I hope you enjoyed it. And I hope you got a chance to collect some cash. If you did, improve your demo account. And I will see you guys tomorrow morning, bright and early. Like and subscribe. Thank you very much for tuning in, you guys. I appreciate your time. I really do. All 1,245 of you. I appreciate every single one of you. Thank you very much for tuning in. And I'll see you bright and early tomorrow. Bring some friends. Help them out. If anybody's into trading, let them know. So you're welcome, Shepard. Thank you very much, sir. Appreciate your time, and I hope you're feeling well today. And as usual, thanks, everyone. See you later, Derek. And as usual, much love to all you guys out there. Keep your family safe. Take care of each other. Be kind to each other out there. It's a crazy world. Everybody's looking to find some hate. So to show them love, man. Show them love. We'll see you guys tomorrow.